News of Pfizer's vaccine being 90% effective has pushed up travel stocks like airlines and cruise ships, while stay-at-home culture stocks like Zoom, Netflix, those are down. Frank Holmes, CEO of U.S. Global Investors, joins us today to talk about airlines, gold, and what's next for consumer discretionary stocks. Frank, great day for JETS ETF.
Wheels up. You know, it just defies, it goes to show how sensitive the airlines industry is to the vaccine and any development done on it. And I've been saying that after this election gets over, then I think a lot of the news will be more positive towards coronavirus. And clearly, this is very positive news for travel. But, you know, the airlines industry is highly correlated, I believe, with what we've been talking about, David, is the Purchasing Manufacturers Index has been trending higher. And the two biggest trading blocks in the world, China and America, we are the leaders right now in PMI growth.
Okay. Yeah, it's up 16% today, the JETS ETF. The airlines industry, like the American Airlines stock, is also up a lot. Now, I want to know if this is pricing in all future gains today, this move that we're seeing right now, because basically what investors are saying is a vaccine's going to come, people are going to be able to travel again. So are all the gains in the future already priced in today, Frank?
Well, whenever you have a sigma move like this, so the daily standard deviation for the airline industry is plus or minus 5%. That's normal. And whenever you get it, it was up 20% at the opening bell. So that's a 4 sigma event. Mathematically, odds of a pullback are very, very high. But I still think it trades much higher because we are still so far away from where it was at the beginning of this year. And what's important for traders and investors to look at is that TSA started publishing in late spring how many people they clear every day. And this has become a very important technical tool like gold. And so you can put the 50-day moving average to it. And we have seen the airlines making newer highs as we go through this year, as the 50-day keeps making new highs.
So this is a good point. So earlier this April, we started off from, I'm going to show this chart, about 100,000 check-ins, total traveler throughput per day from the TSA, data released by the TSA. And that steadily increased throughout the year through shutdowns, lockdowns, through the recession, through the pandemic. It steadily increased. And now we're at about 970,000 is the latest number. Why is that? Why is checkpoint activity at airports still rising this year?
Well, it's important to look at it because as an airlines industry, it's a good predictor of revenue. It's like gold prices going up is a great predictor of revenue going up for a gold producer. And so this has become the important tool. And so when we look at, say, what it was 2.7 million people a day were being cleared in January, February. Then it fell to actually just under 90,000 mid-April, and then slowly been climbing. And I think it's a nice positive trend, but most of that climb is domestic travel. And what's happened in America is that tourism, people want to fly from Montreal to Fort Myers. That traffic has really picked up. And you're seeing United and Delta and American flying from smaller cities all throughout the northern part of the U.S. down to southern states. That's picked up, which is really surprising. The business travel overseas, that's still very, very, very slow. And that's probably not going to come on until the new year. But what the market says is that a vaccine would accelerate business travel, and that's where the airlines make most money.
Okay, so what are the investment implications? And you should be investing in airlines that focus on domestic travel and business travel and not the internationals?
Well, I think that this would be a game changer for the international. But, you know, just take a look at the JETS ETF really encapsulates and captures most of the flying done in North America. And I think that it's a positive trend for all of us. It's very, very important for people to be traveling, for people to be getting out. And yes, COVID's a serious issue, but we must sit back and remember that the median age of people dying is 81 years old, that most people that have died that are younger than 65 have other physical difficulties. Yes, there's anomalies, but statistically, more people in America today will die in 2020 from heart attacks than they will from COVID.
Frank, let's take a look at this chart now from the Dallas Fed. It's showing mobility in the United States. As you can see, it dropped off a cliff in March, but it steadily improved the mobility index, but it's still below pre-COVID levels, meaning that compared to the start of COVID rather, people are still preferring to stay at home rather than travel and move around. Do you see a vaccine changing this dramatically? Because I've heard the counter argument that even if a vaccine were to be introduced slowly over the next couple of months, people are unlikely to change their travel habits anytime soon.
I disagree. The reason for that is because we have gone to 1 million people flying. And a big change is the airlines using AI. Their whole thought process, how fast they move from different airports. They're no longer flying through hubs. Like I said, they're going through smaller cities in Ohio, in Pennsylvania, in New York, going south because tourists want to go. Southwest Airlines just started flying at the beginning of October from Phoenix down to the tip of Cabo, St. Lucas. So there is a really pent-up demand for people to travel.
What about European airlines? Germany, France are back into lockdown. How do you feel about international airline stocks?
Yeah, I think that's going to still be challenged. And that's what we just have to wrestle with. That'll be the second big leg that'll take place. So this is very significant what's happened today. I think it'll get a correction. Buy them on the corrections. And what's also interesting is we have this incredible 4 Sigma event on the airlines. We also then have a 5 Sigma event for bullion on the downside. So I think that bullion's got to be bought. The airlines don't buy until you get a pullback, but it's all bullish.
Yeah. Okay. So you're waiting for a pullback on the airlines. I was going to ask you if you think we're sort of reaching a trough, a bottom here, with more positive news expected to come in from a vaccine, from stimulus and all that, but you're expecting a pullback in prices?
Sure. I mean, anytime you get these type of Sigma moves, usually it's on an upside, you wait for the correction and pullback. But it's made a higher high. That's what's key. And it'll pull back. And the way you go, it'll trade higher.
Right. Let's talk about gold now, right? So we've seen the opposite move, but same idea, a large standard deviation away from its mean. Gold is down 4.5% today. That's a big move, Frank. What do you do with that kind of move?
You buy on those corrections, because another important factor that's very bullish for bullion is when you look at total government debt around the world, $17 trillion is a negative real rate of return yield, 17 trillion. That's hitting the highs that took place a year ago. So I think that's only going to grow. Commitments by the EU is to come up with another tranche of maybe $1 trillion to keep their economy turned because of the slowdown they're experiencing. So all this money printing, when gold corrects like this, it's a gift. It's a Christmas gift early.
Okay. Don't you think that this could be a start of a short-term bear trend because we're seeing it drop so much? It's maybe breaking below some support levels here. What do you think?
No, because the standard deviation moves over 20 trading days, 60 trading days, and 1 year. Those numbers, they're not very, very bullish to say, okay, you have a big price reversal. The price reversal took place in the first week of August. Now we've trended down back to the mean and below the mean. I think it's just one of those great opportunities to be buying gold.
What do you think gold is reacting to today? Because like you said, the fundamentals for monetary policy are still very much still there, right? And so you've got this news about a vaccine, but people already knew a vaccine is going to come out eventually. Is it really reacting to the vaccine news, Frank?
I think it's probably more like interest rate differentials and someone who's got selling pressure. I think there's some country, there's a shortage of US dollars. You know that the Federal Reserve is set up with 15 countries special repos, and those countries that have not been able to get that repo, that special flow of US dollars, then automatically, like Turkey had to blow out a bunch of gold to be able to get US dollars for trade. I think something like that's going to be the opportunity.
Okay, so what happens when a vaccine eventually does come out and people, let's say, get out again? We're seeing treasury prices drop. Like if you look at treasury ETFs, for example, the prices are down as well. It looks like people are just staying away from safe haven assets today. So can we see more risk on sentiment in the next couple of weeks to couple of months, and maybe investors shying away from gold and treasuries? Could that pop?
Well, historically, whenever you get what's taking place in an election, a bull market going into the presidential election cycle. Math suggests over 50 years of data, it runs to the year end. Two, looking next year, whenever you have a Democratic president, a split Congress, and a Senate that's Republican, you get the best stock market plays. And that's good for the stock market. That's good for gold stocks. It's good for airline stock. And it's best to be long. Buy on the dips.
Yeah, let's take a look at this chart now. The average performance of stock markets in previous election cycles, in the best performing category is a Democratic president with a split Congress. First of all, why is that? Because normally, why wouldn't you would assume that a Republican Congress would be the best for investors, but no, it's not.
Because they have to have a real hardcore negotiation getting things through. And if there's any excessive regulations and it's a Republican Senate, they'll stop it. That's what's really important. Anything that's higher taxes, higher regulations, when the Senate is a Democrat, democratically controlled, then it's much easier to push new regulations through. But when it's Republican, it's not. So you get this real sort of big debate and discussion between a split House of Representatives. Then the final product is usually quite good. And if it's not excessive in regulations or taxation, it gets approved by the Senate. It's usually better legislation. That's good for the stock market.
What do you think about taxes? Do you think we'll get a tax raise?
I don't think so. If anything, it'll be modest. And I think the reason for that is to remember, Trump didn't get destroyed by a wide margin. The last thing you want to do is disenfranchise that. It wasn't a slam dunk. It was a pretty tight race, and it's still being debated, but it's still a very tight race.
Yeah, and the Republicans control the Senate, right? So they're unlikely to raise taxes. What about fiscal stimulus? Wouldn't a gridlock put a delay on releasing any fiscal stimulus?
Oh, I think there'll be fiscal stimulus. I just think it'll be much more measured and related to something that has a high economic input in turn versus just giving away social money, just give away money. I think it'll be more focused.
Shouldn't the markets sell off, the equity markets sell off from that kind of news? Because if you're expecting, let's say, an X amount of stimulus, and all of a sudden now we have a divided Congress, and now we're going to get less stimulus than expected, shouldn't that be bad for stocks?
No, there's so much money, David. You got to think of this: 1 trillion seconds is 31 centuries if you measure it in time. 1 trillion seconds. So $1 trillion here, $1 trillion, that's a lot of money. And then the Federal Reserve is now 33% of the GDP. When Greenspan left, it was 6%. I'm talking about very serious money printing, and it's not over in Europe. So no, I think this has got lots of leg room to it. Buy on the predictions.
So let's sum up, Frank. Wait for a pullback in airline stocks, then buy it. Buy the dip in gold and stay long, and then buy equities because of a split Congress. What am I missing now?
That's what I'm sharing with you.
Frank, awesome. Fantastic talk. Thank you very much.
Take care.
And thank you for watching Kitco News. I'm David Lin. Stay tuned.